Hi, everybody, and welcome back to yet another cracking installment of the Matt Brown Show. This is the Secrets of Scale series. We're changing everything up for 2023. And with me on the line is the CEO of Cloud. Did you say Cloudentity.com? I was trying to say it's not
Yeah,
Cloud Identity, guys. It's not that,
yeah.
okay?
It is
uh,
kind of, but we've combined
but
them.
it's
Yeah,
kind of it's a cool branding, mind
yeah.
trick that they're playing. It's like Jedi mind trick for cloud identity. But but with me on the line is none other than the CEO, Brook Lovatt. Welcome to the show.
Thank you.
Cool,
It's
Bad.
glad to be
So
here.
why don't you kick us off and give our viewers around the world just the elevator pitch about what you guys are up to, the problem that you solve, who your customers are, and that kind of thing.
Certainly. I think most people have heard or, at least bump into the term zero trust at some point in their, journey in computing. So what we're essentially doing is addressing a large portion of zero trust by providing the capability for customers of ours to provide their customers with safer services by authorizing every single transaction that occurs rather than by making assumptions about the fact that you've authenticated as a particular identity that you can do X, Y, Z, right?
Mm-hmm.
What this does is it drags along a lot of requirements for massive scale because we have companies that you might do 1,000 authentications a second, but you might be doing hundreds of thousands of authorizations per second to support the same volume. Think about like a video streaming service or something like that, where you're constantly authorizing content.
All
And then
right.
beyond that, it also drags a lot of requirements around consent. Like, so you're not just getting information from these systems and these APIs, but you're actually transmitting your own information to them. And we manage the authorization of the flow of data in both directions. And that authorization and consent as a service in a SaaS platform is something that we're pushing pretty hard, and that's kind of our lead into the market there.
Great. So you were brought in as a chief product officer. Now suddenly you've got the huge responsibility of being CEO. How has that transition played out for you in the context of scaling what you guys are doing?
It's played out pretty well. I mean, the reason that I came in as the product officer was really to take the company from a software vendor that was creating software to be deployed by customers and turning it into a large scale SaaS infrastructure. And with SaaS comes a lot of pitfalls and possibilities that a lot of people haven't run into before. And I've built quite a few of these over the years. Some work with other startups that were brought into IBM and companies like that, where we've really built some big operations that support massive, governmental operations and large companies around the world. So when I came in, I kind of took the company and we made a bit of a turn, to the right, if you will, and created the SaaS infrastructure, started getting certifications for SOC 2 and ISO 27001 and stuff like that, and started bringing in some really big customers to the platform. And so I think the transition to becoming CEO is very natural for me because it's a very technical sale. It's a very technical company. We're led by engineers, and the go to market, even just having a discussion about it requires a pretty good level of understanding of the product and the space. And to explain it to someone who's a potential buyer, also takes a pretty high level of understanding of how the things are going to work and how it can apply and provide value to that customer. So it's been a pretty natural transition for me. Obviously, I'm learning, all the time, and our investors are providing me with assistance in the areas where I don't have the expertise. But it's been a good journey so far.
Mm-hmm. So, Brooke, this is the Secrets of Scale show,
Mm-hmm.
series, I should say. You guys have just closed your Series B for $20 million at the end of June or thereabouts. What has been, or what keeps you up at night when it comes to scaling
Mm-hmm.
Cloudentity?
I think there's a number of different things. When you're a smaller company, first and foremost, I think it's infrastructure, right? So the amount of money we spend on AWS compute, for example, and bandwidth to run an operation at this scale is directly affected by the fact that we have to run it in multiple different geographies at the same time for two different reasons. One is, you have data sovereignty rules and regulations. You have, customers who don't want their customer data outside of a particular geography. But you also have to have multiple regions within those geographies to support like 4 nines of uptime, for example. And a high volume might require that both of those systems are hot at the same time. And I think that the cost of creating such an infrastructure kind of in advance of bringing a lot of customers on board is a difficult balance for a smaller company that's funded at kind of lower levels, right? So I think that's one thing. The second thing, and arguably just as important, is providing, real eyes on glass monitoring and support for the system on a global follow the sun model with a company. We have 55 people, right? And you figure 20 of them are business people, go to market people, right? So the remaining 30 now are on rotation, and on call. And someone, we've got people that are in India, we've got people in Poland, we've got people across the US, some in Australia and so on. So, we're covering the time zones, but it's a difficult dance to really keep that going. I mean, we're not, Microsoft, so it's difficult to smear the people out. So that has been equally difficult. And I wouldn't say that it necessarily keeps me up at night, but it has kept me up at night in the past. But those are really the two big things. It's achieving scale at a reasonable cost and balancing the business spend with, the actual revenue that you're seeing from it now, not in a year, not in 2 years, but now.
Well, I have to ask you now because you mentioned him. So Microsoft. So Azure revenue's fallen off a cliff. And one of my mates works there as a partner development manager. 10,000 people laid off. Seems to me when it comes to scaling infrastructure, something's not working. What are your views on what's happening there?
I don't think it's as simple as just, there's a macroeconomic shift and people stop buying the service. A company like Microsoft, look, I haven't ever worked directly for Microsoft, but I've certainly been in and around their ecosystem, and I've worked for Oracle, I've worked for IBM. We're heavily entrenched with Amazon, for example. We run our infrastructure on AWS, and Google is a partner of ours. There's a lot of interaction. So what I can tell is that there's always going to be ebbs and flows of usage, and I don't think that humans are managing these infrastructures. I think that we have automation. I mean, even our company, right? We no one actually touches anything, right? It's all automated. So you're working with a representation of the infrastructure as code. You push a button and it's deployed. And no one really ever touches anything because it breaks all of the compliance rules. Like, you can't have somebody with like root access to these systems. It just doesn't work. So I don't think that 10,000 people being laid off out of Microsoft is going to have like a direct effect on their infrastructure. And I don't think that the consumption of their products is what's causing that layoff either. I think that, these big companies see a macroeconomic climate in which it's acceptable to lay off a large portion of the workforce. And they take that opportunity because it's important for them to be able to shed people and bring in new. This is not stopping Microsoft from acquiring companies. They just bought, $10 billion worth of Chat GPT or OpenAI or whatever it was. I don't know, something huge. They're still hiring, right? It's to me, it's more of like a maneuver than it is a necessity.
Well, this is what's interesting, isn't it? Because, I mean, if you think about this the mindset of a scale, which is kind of where I want to go right now, you've got people who, well, let's just say, mature stage companies, behemoths, who are laying off 10,000 people, but also in the same week, or like within 2 weeks, they're like putting, $10 billion on the table to buy 49% of Chat GPT. And we all know what the kind of message that sends, doesn't it? It's like, well, you're putting 10 billion into this technology, OpenAI started, you know what I'm saying? And then you're also letting go of 10,000 in the same month. So like that can't be a good thing.
Yeah, and I mean, candidly, it's two different parts of the business, right? I mean, the corporate development people that are buying OpenAI are not the people that are making the HR decision to cut human resource costs, right? I mean, and they're so disconnected. So I can understand, look, I don't have inside information or anything about this. I just looking at it, like, I can understand how you would make those decisions. It's no different than Amazon laying off people at a boxing warehouse and buying robots to box the goods. It's exactly the same thing.
It is. How do you approach your mindset now? I've talked to startups all the time. A lot of my clients are all these scale up startups and stuff like that. We're all talking about the market and and the potential recession for the next 12, 18 months. You're not getting the valuations you were 2 years ago. It's harder to get capital. Cost capital is higher, et cetera, et cetera. So I'm curious to unpack with you, what's your mindset now when it comes to scale? Because you can't be reckless.
Yeah, I agree. So definitely a company of our size has to tread really carefully in this area, right? One is like, when we took the initial investment, I mean, 2020 was our initial Series A, and we actually haven't done a B, but we did like an A prime with the same investor, so we sort of extended that. And in hindsight, it probably would have been better to go for a B round before the economy went the way that it went, because the money would have been there, the multipliers are higher, and two things have happened. One is that the multipliers just aren't as high. So no matter how well you're doing, the X, it has a smaller number after it. But the other thing is that, sales slow also, right? Like anything that's not absolutely essential spending for customers is being delayed or canceled. And a lot of times, like security kind of skirts the edges of that. And I've been lucky, like I've worked in security my entire career. So for 25 years, I haven't really seen a direct impact of economic conditions on purchase power. Because if I look back in 2001, when I was just starting my career at IBM, security was the most important thing in the world because September 11th happened, and that's all anyone was spending on for years, right?
Mm.
And then similarly, in like 2008, 2009, security really wasn't affected because if you're going to cut costs, it's not going to be on protecting yourself. And now I think we're starting to see some cracks in that mentality where security is becoming very expensive. Attacks are becoming more sophisticated, more popular. They're happening a lot, right? And not only that, but now we've taken all of our applications, and instead of them being like these unitary monolithic things, we've broken them into a million pieces, and everything is microservices and APIs, and there's just more attack surface, right? So when you look at your budget as an IT shop or as a product provider of any kind, really, a large portion of it is going to be in security, and that might be divided between like cybersecurity, threat detection and response. You've got compliance internal for like how your employees behave, and then you've got access control, which is what we're doing, and all of that together forms a pretty big, lump of money annually for these companies. So
Mm.
I can see why they want to cut it, but then every day we hear about new breaches, right? Whether it's a bank or a telco or a healthcare provider or whatever it is, right?
Mm.
There's all kinds of different security issues, and a lot of times those are just things that weren't done properly, or we know how to fix these problems, but the stuff wasn't patched or whatever it is. So the mindset that I take looking at that, kind of getting back to your question, is that we have to be playing a longer game, right? The macro economy is going to change. For a startup to say, okay, I got a 2-year event horizon, I've got to make a certain number of, a certain amount of revenue or whatever in this time happen in order to get further investment, is a necessity. But even the investors are attuned to the fact that you can't control the outside, and the technology may be very valuable even if you're not hitting the numbers that you originally had. So I think you have to be careful that you're not just going for this growth at all costs mentality, and that you're actually building like a real sustainable business where you're making money on something that you can continue to do at scale or at a slightly smaller scale without overdoing it. And the balance, as you said before, is how do you prepare yourself for massive scale without, you know, overspending? So that's my issue. And then for our customers, we're basically providing them the ability to create a massive security scaled environment without buying it all at once. They pay per transaction with us,
Mm-hmm.
so they could buy a little bit and use as much as they need.
Yep, absolutely. So we're going to take a quick break, and now a word from our sponsor. The Matt Brown Show is presented by Carafin, an investment bank that offers and supports direct private investments in U.S. operating companies. Over the past 20 years, investors have placed over $1.2 billion of private debt and equity in more than 100 companies through Carafin and its affiliates. Carafin leverages technology to empower its community of investors to deploy their capital far more efficiently than ever before, and connects their community of engaged investors with worthy companies. Invest portions of your portfolio in direct private investments today. Visit carafin.com/Matt Brown Show for more. Welcome back, guys, and with me on the line is none other than the man, the legend, Brook. Brook, you were talking about cash burn and making sure that you don't burn through enough cash in the process of scaling. How do you manage that? What have you learned about effective scaling of operations while protecting the downside of burning through cash too quickly?
So one of the things I've learned is that there are tools and mechanisms available to you that make this a lot easier nowadays than it used to be, right? So 10 years ago, and maybe longer, maybe say 15 years ago, even I was building initial SaaS products like when SaaS was kind of a new thing, right? And we were like leasing cages in data centers, and I had to have a guy go through a man trap and like rack computers, right, in this thing. And so you're managing everything. And if you want to invest for scale in an environment like that, you're pre-investing. Like we bought millions of dollars worth of computing equipment, and if we used it, we used it, and if we didn't, we still bought it, and it was sitting there. Now you're buying infrastructure piecemeal, right? Whether you're on Azure or GCP or AWS or whatever it is, you're buying compute power, not individual machines, and you're buying instances of like virtual computing, network and bandwidth and all that stuff, right? So that's one of the areas where automation becomes key, because you need your environment to be totally ephemeral. Like our system is rebalancing, and we basically treat everything. And any well-run SaaS company is like this. You're treating everything as if it's going to live in a short, ephemeral manner. It's going to go down. And the system needs to be resilient enough and dynamic enough to adjust for that. And once you've done that, now you can start to leverage technologies for auto scaling that can use AI and kind of machine learning to determine when to scale and when not. And then even beyond that, if you're using things like spot instances where you're not claiming, a particular piece of hardware, you're saying any kind of compute that you can give me, I'll take it for 5 minutes. There are platforms out there. Like we use a system called Vantage. We pay for this product, but it saves us like, I think probably 50 to 100,000 a year just in compute, because it's like E-Trade for Amazon compute. It like trades and sells and buys spot instances for us automatically, and you can literally just watch it make you money on the spot instances. So the environment just operates itself. So you make an investment in the automation, and you can put yourself in a position to take advantage of that stuff. And I think that's really key, and it's one of the areas where bigger companies have trouble turning the corner, and smaller ones like ours with so many fewer people can run something that's just so much faster and cheaper and better, and that's the advantage.
Yeah, exactly. I mean, I was talking to a client of mine, Craig. He runs Granite Warehouse Management Solutions out in New York. And we're talking about Chat GPT 3 and, what's coming 4, 5, 6 and so forth. And obviously it's just like language for now. And one can understand, going back to the Microsoft, potential acquisition, right? And that the opportunity for that startup to scale through everyday, productivity applications, words, blah, 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 is really remarkable. To your point, though, when it comes to the application of these tools, I still think Chat GPT 3 is underutilized by, I would say, 90% of people, because they don't understand what it is that they're playing with, or how best to get the right results. So if you say to me, give me 10 questions for Brook Lovatt, who's the CEO of Cloudentity, is one way to do it. But if you spend time with the prompt, or the tool, and you start to figure out how best to apply it, you start to get richer questions, richer insights, richer applications, and so forth. And it's the first real world example of a tool, an AI tool, that is actually not shit, And maybe Google had it and has it. Like, remember that whole stink a few months ago? It was like, there's some engineers like, the Google AI is sentient. It probably is. We just don't have access to it right now that that
they wouldn't tell you anyway.
It's not shit. It's like it's a real thing. Right. And it's something that I use like every single day, not to write content, but to learn, like to get, it's almost like it's Google with a voice,
it's aggregating what Google gives you back.
Yeah, exactly. It's almost displacing Google in some sense, isn't it? Because, obviously we could spend time there.
Well,
go ahead.
I mean, there's a bit missing though, right? So when you get your Google search, and I've been doing quite a lot of reading about this. I'm no expert by any means, but I've been doing quite a lot of reading and listening to podcasts and so on about this. And I think the difference between what OpenAI can do with the neural, so this is a particular type of AI, right? Neural network is just a volume of information. So if you think, okay, you've got a robot doing a bunch of Google searches and aggregating the information, it doesn't have like the basis in reality to determine what's real and what's right and what's not. And so you do get errors, right? You get like mistakes in the responses. And there's tricks that people have played on it too, right? You can ask it, what will be the gender of the first female president of the United States? for example, and it won't answer the question, even though it's quite easy, but it can't work it out because it goes off the guardrails and it won't do it, right? And that was something I heard from like an Ezra Klein podcast or something. There's a lot of things that it'll do, but a lot that it won't. And there's other people in AI that are kind of outside of the neural network foundation that want to take it in kind of different directions. So it's not the only application, but certainly for what it's good for. Like if you want somebody to create you a script for a sitcom about two random characters from politics or something like that, like it'll do it. It does a great job at it.
Yeah.
So it's underutilized. I agree, but you have to understand where the limitations are.
Well, if only ChatGPT wouldn't, didn't. I wish it didn't have scaling problems because if I see this stupid window that goes, "Oh, ChatGPT is at capacity right now," it's like, listen, you guys don't get to go to market with that sort of a tool and then not able, kick me out. So like I'm on my phone right now, and then up on the screen for everyone on the podcast, I've got like that standard capacity message.
Yeah.
I mean, this is the issue, isn't it? It's kind of like
they could have scaled it better. Yeah,
and I recognize like they're pre-revenue. I get that, but still,
everybody's pre-revenue.
Yeah, exactly. But I mean, come on, man. Come on. What, are you gonna have the same problem when you charge me $50 a month? You know what I mean?
Yeah. Well, they just weren't expecting, I don't think, the amount of uptake. I mean, when it went live, well, not when it went live, but when everybody figured it out, like a few weeks back, whenever that was, it was heavy. I mean, a lot of people started using it, and it was pretty crazy. We had it write a couple of press releases for us. I mean, minor edits, and those things went public, right?
Lies.
And it's pretty cool. But I agree. I don't know why they can't scale it faster, and they're rate limiting pretty aggressively at certain times of day. Maybe it's that the way that the neural network works can't be scaled in that way. I mean, you do have quite a large, amount or array of information. It kind of goes back to that question of ephemerality, right? Like if things can be broken down and unitary and replaced and recreated automatically, then you can scale them very easily. But when you're talking about a broad system that requires replication of data and learning constantly, I don't know if it works the same way. Like that's not the kind of computing that I generally work with. So it's possible that there's scale issues there that I haven't dealt with. But to me, it's probably that they're not doing it right. And they're very good at AI, and they're not great at scale. Right?
Yeah. Which is the most ironic thing, isn't it? Like
because the AI should be able to work it out, right?
Like, come on, man. Yeah,
scale.
Exactly. Like, help me to your point, right? Help me scale. Look at my
how do I scale ChatGPT-3? Right.
Yeah, exactly. I mean, come on. But I think the opportunity though for startups is to figure out how to work with tools like. I mean, now if I had the same conversation literally a month ago, it would be a different. People are like, oh yeah, AI one day in the future. But now, when we talk about, well, what are the real world applications of a tool like OpenAI or Chat GPT in scaling cloud, in scaling media, in scaling ads, and scaling SEO, and now it's like, holy shit, this isn't lip service anymore. This is actually a real thing.
Yeah.
So let's stay here for a moment, Brook. So let's future pace a month, let's just say for the purpose of today, that OpenAI is now scale ready. You pay $50, $200, $1,000 a year to get access to this thing. And you have an API integration, right? So you're able to take this whole thing and integrate it into your own business, or you can apply it in manufacturing and whatever, like your specific context or use cases.
Yeah.
And remember, this is all about scale. So what's your advice to a founder or an entrepreneur or a C-suite executive listening to even an investor, right? Who's trying to scale what they do from an operations perspective, or maybe it's a retailer looking to scale their customer experience, whatever, right? They're all looking to apply this thing, but they have no idea where to start or what to look out for when it comes to scaling their business through the application of these sorts of technology. So that's my question. How does one approach this? Just top level thoughts.
So candidly, I haven't really given this that much thought. So from a business perspective, so just off the cuff, I think that the important thing here will be to make sure that you can sort of confine the responses that things are going to give you. So there's a couple of different business applications. One would be like your website chatbot could be amazing, right? Support can be done with this thing. It can search the support docs and the solution guides and help a customer without a human being involved. I think that sales, sifting through leads, like top funnel, finding SQLs or MQLs that become SQLs or whatever during that time. I think it could do a great job at that. But I think that you have to train it, right? And I fail to see with the model that's currently there how all the information in the world can be confined and tuned for the purpose of one business, because you do want your voice to be specific, right? I don't want my chatbot telling people about competitive products, and I don't know how to stop it doing that, right? And you just put like, but only for Cloudentity at the end of every query. Maybe that would work. I don't know. But I think that if we could harness the power of this thing and let it learn, and maybe that's how they monetize it, right? Maybe that's where it goes, is you give somebody access to the bot, but you tell it what the guardrails are, right? Because if it's a public thing, the guardrails are, neutrality on certain subjects that are hot button political issues, right? You can't get it to talk about, gender and politics or whatever it is. And then there's going to be things that are illegal. I think my girlfriend asked it just off the cuff, like if you could get it to like change your parents' will or something like that, and it won't do anything sketchy like that, right? So I think that the point of it would be that these guardrails for the public are not the same as the business domain. And if you're going to sell somebody a subscription, whether I'm paying them 10,000, 100,000 for it a year, I need to be able to control it. Otherwise, it's just like holding the circular saw by the cable and swinging the thing around, right? I mean, it's going to do all sorts of stuff, and you're not going to be able to control what it comes out with. So I think that's kind of my position on it, right? Early days.
The early application for me is in the love sector. Scaling your romance. I just for a giggle, I said, write me a poem to my wife Nina about how amazing she is, and she and it wrote the whole thing, and I copy pasted. I sent it to her, and she went,
yeah.
"Aww."
Yeah, I had similar
So
experience in the universe.
So that's how you
So
can't scale your romance, bro.
exactly. I showed it the tool a couple months whenever it came out, right, with my girlfriend, and she did the same thing. She had it like write me a letter, and it was amazingly accurate. I was certain that she wrote it. It even mentioned specific things, that I thought were pretty accurate,
Yeah.
And it was scary. It's very scary.
So for all the men out there who are, or ladies, I suppose, who are thinking about using that particular use case in the real world, I said I admitted it afterwards. She says, it doesn't sound like you. And I'm like, no, well, it's because it's, it's probably not me. But I just found the poem and I sent it. And she goes, so never personalize the poem. That's the number one rule. You must always just send the poem and say, hey, I found this and I was thinking about you. So there you go.
Yeah.
And on that bombshell, it's time to take a quick break and have a quick word from our sponsor. Scale your business with your own AI-powered digital marketing assistant. Sign up today and get $250 of your first month's ad spend back. Check out meetotis.com/rapid returns for more. And welcome back, everybody. See, these ads are short and sweet, but nonetheless, they are sponsors with amazing products, by the way. So I want to quickly talk to you about your products, Brook. So walk us through, because when we first met, you were giving me some astronomically huge TAM numbers, or total addressable market numbers. Just in embedded finance, for instance, that's worth 7.2, or projected to be worth 7.2 trillion by 2030. Open banking on its own is worth 43 billion, estimated to be by 2026. You guys are in a very interesting space. So walk us through a bit about your products and how they help your customers solve problems.
Sure. So, let me first define, I'm not sure if everybody's familiar with open banking as a concept, and embedded finance kind of builds on that, right? So if you live in the UK or Australia or Brazil or pretty much anywhere in Europe, you're dealing already with this technology that forces banks in a particular jurisdiction to open up their APIs for access to financial tech, like fintech applications, right? So financial technologies that come along and provide new and interesting things. Like everybody likes to use Venmo and whatever there is, right? Different payment platforms, different things that help you analyze your wealth or whatever it is. Now, in order to do this safely, a couple of things have to happen. First, you have to vet the players, right? You don't want the fintech to be subversive. You want it to be a legitimate company. So you want to have it like establish trust with an anchor of some kind, like the government or maybe the banks themselves. You want the bank to establish that same trust. And then you want to be able to automatically and on a level playing field allow the fintech to establish access to the bank systems And once you've established that trust, now you can start to transact in a way that the user, the end user, can say, okay, I want fintech A to get my account information from bank B. And I, as the user, are prompted for a specific consent, and I have specific control over that consent. And then without that, with that consent, rather, the fintech can get the bank information and pull it in until or unless I revoke that consent, right? So that's basically the concept of open banking in general. And it's coming to North America, right? Canada's announced laws. The US looks like it's going to be doing something by 2024. And what embedded finance is it takes this concept and it makes it a reality for sectors that are outside of finance, right? So what if you're like trying to buy a car and you can literally finance the car on the internet straight away, while you're buying it? Like, we're almost there. It doesn't quite work like that, right? Like, what if you're trying to, buy something and you want to pay for it directly? There's a lot of different scenarios where you're bringing and you're embedding finance in these other things, right? So when you talk, and you can look on, if you search right now for embedded finance TAM, you're going to find something from Blaine or whatever, and it'll say, $7 trillion TAM. Now, this is for the entire finance market, right? So I figure, a small part of that would go to security, because every transaction has to be secured. And what our platform does is it provides that trust anchor setup in the beginning. It manages and performs the consent that the user provides, and it performs the real-time authorization that occurs when the user accesses the data, or when the fintech accesses the data from the bank. So even if it were only 1% of that TAM, you're still talking about, what, 70 billion. And that's only one sector in which this type of technology can be used, right? You've got healthcare, you've got insurance, you've got pensions, or whatever else, and in Australia, most of that's already happening, right? They've already got CDR, and it covers all of those different sectors. Energy utilities are another example. So, that's basically the business concept, is that you need the ability to share business to business data on behalf of an end user or data owner, in a way that the user has control over that data.
Mm. Yeah, it's very interesting, that space, right? Open banking. That's been like top trend
Yeah.
number one, but like banks seemingly don't get there. But we
Yeah.
all know why. Corporate antibodies hashtag. So quickly on this one, what you're doing is not easy, right? And I'm always curious because I'm a media dude, and I get communications and stuff like that, because I think one of the key challenges that I think we all have when you're doing like hard things like technology is the ability to concisely communicate the problem to buyers in a quick and efficient way. Because again, if you fuck that up, you can't scale. It's like then they're like,
Yeah.
oh, it's not for me, and you have your pipeline's full of shitty leads, or whatever the case might be. And so if you're looking to scale, it's kind of like, well, if only we had done it like this, 6 months ago, or maybe if we had communicated the right problem to the right customer in a different niche, or maybe it's a different region, depending on what kind of scale you're at. But that
Yeah.
issue of communicating the right problem to the right person, right, in a way that's quick for them to understand, because you spend 2 minutes just talking about what open banking is, and then you spend more time trying to figure out, like, so there's
Yeah.
a lot of conversation that actually has to happen. So in the
Yeah.
context of scale, one, how important is this, right, this ability to
Yeah.
communicate concisely to the right
It's
person around what you're doing?
it's essential, right? And you're absolutely right. And the way that we've approached it is, to some degree we can make headway, and if the person understands the concept, then it's tears of joy when they see that we can solve the problem very quickly and efficiently, right? But those people are rare, and what we find is that the go-to-market strategy with partners is much better. So a partner that's offering a holistic solution that uses us underneath enhances our ability to grab that market segment, right? So we have partners that are, API management tools, and they're selling an API suite to the bank, and that includes the ability to advance open banking. Our actual direct customers are like service providers. For example, there's a company called SimCorp in Canada that's owned by like the three largest banks in Canada, and they provide. This is a company that does like check processing for all these banks, and now they want to move into open data and open finance, and they need a tool, and they're selling it to every bank in Canada. And we're just the underlying tool, and the more they make, the more they pay us, right? So those channels are very much essential to our business, because with so few people and so few people out there that understand it, like talking at our level is, it's
Mm.
like science fiction, right? It doesn't,
Mm.
people don't, they're not there. And the people that do understand it are technologists, and they're not the buyers anyway.
Yeah.
So, I totally see what you're saying, and I totally agree with that.
Yeah, well, if this is, I guess, suppose it's well, I don't know if I told you, but my previous company was a media business that did lead gen for tech brands. So
Yeah.
we worked with Oracle, Microsoft, all the kind of haunts that you might know today,
Yeah.
and they all have that same go-to-market strategy where it's indirect as opposed to direct, because they don't want to deal with 2 million small business customers. They'd rather just have
Mm-hmm.
1,000 partners dealing with the customer blowback. But more importantly, it's a very smart way to scale strategically. It's through the indirect channel. So you have, these 1,000 partners. They have collectively 10,000 relationships. You incentivize the indirect channel, the partners, to go and scale by giving them a kickback of licenses or rebates or what have
Yeah.
you, and then off they go, and they go and sell for you. And of course, if you've got the weights and the innovation of Microsoft behind you, or as as an
Mm-hmm.
OEM, then things start to happen for you.
Yeah, yeah, totally agree. And I think it's really something in tech, particularly in security. The partner channel is essential, right? You cannot grow a small company's revenue without it, unless you inject such a large amount of money that you're talking about a unicorn. A 2 years ago, there were companies getting $100 million investments on Series B or C and that kind of thing, and that's just not happening anymore. And like, no one's going to take that kind of risk on a new type of tech. Not right now, anyway.
Yeah.
So it's you have to use the partner channel.
So how do you scale operations then? Let's park the indirect option for now. You're a pure SaaS
Mm-hmm.
company, for instance, or maybe you're a whatever type of business you are. What have you learned about scaling operations quickly? Because this is oftentimes the rub, isn't it? You close your round for 20
Mm-hmm.
million, 30 million, and suddenly it's like, well, where's my growth?
Yeah,
So you're now forced
yeah.
into a situation where you have to burn cash on growth initiatives.
Mm-hmm.
And so in many cases, in my personal experience, I found that situation to be a double-edged sword, because if you're not really careful, or if you don't have the right team, you know what I mean, like, you have to actually do it in a
Yeah.
responsible way. And we've
Yes.
we, we've heard nightmare stories of customers burning like $100 million and not getting a single dollar back.
Mm-hmm.
So somewhere there, like, something went wrong. So
Yeah.
what's your
Yeah.
advice, or what have you learned about scaling operations quickly?
Yeah. So I think you have to expect to make mistakes and not well. So there's two ways to look at it. One, if you want to move quickly, you got to take risks, right? So hiring, I think on average, like from a technical person perspective, if you're hiring three people rapidly, you're probably only going to have one of them at the end of the year, right? And you just have to expect that there's going to be that kind of turnover. And one of the areas where hiring can get a lot easier, especially when there's short turnover like that, is going to be through recruiters, because they're not going to get paid unless the person stays for 6 months to 12 months. And if the person doesn't work out, pretty quick, right? Usually. So I think that that's something that you need to expect, and you got to try people out. You have to hire people in clumps, right, in groups, so that you can train them in bulk. Like, you don't want your best programmer, for example, spending one-on-one time with a new developer. You want them spending one-on-four time with four new developers to get them up to speed. And the ones that don't make the cut, you fire them straight away. And it's ruthless, but that's the way it's got to be. Now, the other thing is, we talked about this already, is automation. You
Mm.
cannot expect to be able to hire people rapidly enough to scale for actual throughput, right? You have to, like, the whole point of SaaS is that you have endless upside, because you can add as many customers as you want, and you don't really need any more DevOps people. And certainly if you're not built that way, like, if you have to make an incremental spend on infrastructural staff every time you sign up a customer, you're done anyway. So you might as well just stop and go to
Mm.
the bar, right? There's no point. So I think those two things are probably the most important lessons that I've learned over my, career. And you don't want to spend recklessly. And I think that it's important to, you want short contract terms. Like, if you're buying a tool and you're not 100% sure that you're going to use it forever, don't buy 3 years of that tool. Like, spend a little bit more, do it month to month, and renegotiate later. Like, you want to be able to move. Like, we've used tons of different compliance tools. We've used different that I told you about the AWS thing that does the trading on the spot instances. I mean, that stuff's amazing, but like you don't find those things automatically. They're having the same sales and go to market problems that you are.
Yeah.
So you're trying to find these tools and they're trying to find you. And when you get a good match and you get into a good relationship, then you can extend those contract terms. But getting stuck with something and then not wanting to bail on it is expensive if you haven't negotiated the right contract, right? So you just need to be agile, I think. And you're going to make mistakes, you're going to break eggs, but you have to spend to earn. You just have to make sure you're doing it in the right spot.
Yeah. How many eggs do you need to break when it comes to scaling your infrastructure?
Yeah, exactly. I mean, the fewer the better, but
Yeah.
you're gonna do half the box, probably a third of the box.
Yeah, exactly. We'll be right back. Raising money for your startup? Well, why don't you close your next funding round fast? Get investor-focused media and FaceTime with relevant investors in days. Visit showworksmedia.com for more. That's showworks with an X, media.com. So Brooke, question I have is about culture. So obviously, if you're scaling, people are really essential to all of this. You touched on this just before the break. How do you scale culture in a distributed fashion? Because that seems to me to be a commonality that I find when I talk to CEOs of scaling companies such as yourself. Because you have 55 people, they're not sitting in the same office, or you have 170 people, they're not sitting in the same office. Some are sitting in, by the way, some are sitting in different countries, different time zones, and so it's like, well, if your business is just people working together to achieve a common goal, like culture is a really big thing. So what have you learned about scaling culture in a distributed workforce?
So one of the things I've learned is that there's different types of roles that require more hands-on and direct interaction, right? So our development team is primarily based in Poland, and we actually do have an office in Poland. And so let's say half, maybe a little over half of the developers do go there. And it's not just developers; it's QA, it's DevOps, it's UX and UI, and so on. And they kind of go to this office and they hang out. They don't necessarily go there 5 days a week, but they have a place to be, and we have a central meeting spot. Right now, the go-to-market people, the sales people that are flying around, they're not necessarily. It's not so much of a requirement that they interface with each other. So I think paying attention to what roles are which, and trying to put the ones that need a nucleus and a smaller orbit in one spot is very important, whereas the other ones are not so much, right? Like, for example, my SVP of finance moved to Hawaii recently. And okay, he has to get up real early in the morning, but it's fine. Like, it does not adversely affect the business that this guy is up at 3:30 in the morning. It affects him adversely, but he wants to live in Hawaii. He could live in Hawaii, and I can meet with him at certain times, right? I live in Florida. I'm in Seattle right now, and we shut down our physical office in Seattle because there was no one there. I went there like a year ago. It's like a 3,000 square foot place looking at the Space Needle, costing a fortune. And there's one guy sitting there. There's like ping pong tables and all this. I mean, at what point do you just say, all right, we are remote, we don't need this office anymore. So I'm here in Seattle to meet with the people that are here. Our CTO is here. A lot of our investors are here. It's a place where on the West Coast, there's kind of a nucleus for this type of thing, but it doesn't mean that everybody has to be going into the office all the time. And as a result, we can now widen our hiring strategy for people that are going to be out there talking about the product, right? My, VP of sales or my customer success people, like they have to be very specific, and I can hire from anywhere in the country or anywhere in the world. It gives me a lot bigger, chances of getting the right person.
Mm-hmm. Which is
so
also
I think,
a huge plus,
balancing.
by the way, don't you think?
Yeah.
Yeah. I mean, we did.
Yeah.
It's like that was a gift of COVID.
Yeah. It was. And it was always something that you could do. But I think that what COVID did for us is it brought the tooling up to par with the remote work, right? So I've been working remotely for 20 years. But like in 2014, I probably flew from Florida to London 13 times. And like, I don't ever want to spend another year with that much seat time on an airplane. Like, there is no point. That's not how human beings are designed. And like, I have still probably physical ailments from that period of my life, although I did have status on Delta or whatever during that time. but the problem is that there wasn't a good enough way to meet face to face, and everybody wanted you to go there, particularly the English. They like to be face to face, right? So now we have customers in London. We have massive customers in London, and I have only been there once to see them, because they just don't care. They're like, okay, you're on a video call. They can see my face. They trust me.
Mm,
We've shaken hands before, and it's done. So the tooling was brought to us by COVID, but the concept, I think, was there already, right?
mm.
The bigger companies were shifting people around all the time.
Yeah, exactly. Just a couple more questions and then we'll wrap up. So, quickly around funding to scale, I think oftentimes
Mm-hmm.
we this whole idea, like I was chatting to Steve Blank and David Sconthal about this. They're like, classical lean startup,
Mm-hmm.
theoretical, also scaled businesses too. But this whole thing around unit economics comes up. Like if you need to know what your numbers are. So if you have
Mm-hmm.
a spread of customers and it's like one and it costs you $1, like if you put another $10 in, are you going to get another 10 customers back? And so
Right.
sometimes it's like, it's this idea of like, well, when do you know you're at product market fit? And there's different definitions. And then there's problem market fit, and then that's a different
Mm-hmm.
thing. And so there's a lot of confusion and misunderstanding there. So in the context of raising money, like you guys probably going to go into Series B at some point, I would suggest in the
Mm-hmm.
next 12 to 18 months, maybe, depending on what happens this year. But this idea of funding doesn't go away, right? So,
Yeah.
what role does Series B capital play in your idea of scaling this company? Is it kind of like is it more just fuel for the engine, or is there a different perspective that you have in your mind?
I think that it's more than fuel. I mean, it is the fuel. Obviously, you need money, and we're far from profitability at this point because we've injected so much money, and it would take a lot more customers than we're going to be able to get in a year, even through the partner channels, to get to the point where we're cash positive over a certain period of time. So you're looking at a longer event horizon, and I think that where the funding becomes important is you need to understand A, how frequently you want to go back for more funding, and B, how much you're going to be able to get. You know, 2, 3 years ago, having a down round would have been a catastrophic, thing, right? It would be a failure. You would consider it something that's happened that's not good for your business. But I think that now a lot of companies are doing that simply because the valuations are down. So being realistic about how much money you're going to be able to raise a year from now, 2 years from now, is going to affect your trajectory and how cautious you are about growth. The other thing I'll throw out there is that growth, like there's a lot of companies, and I mean, we're to some degree guilty of this too, is that, you take these investments and it's just to get a little bit more ARR, you're going to invest tons and tons of money, way more than you're going to earn on that annual revenue, right? And the growth is what's driving the valuations. When the multipliers are large, it makes sense to spend $20 million to make five a year. But when the numbers are not good and the multipliers are not good, all of a sudden that becomes crazy, right? And now you're just throwing money away. So finding that balance based on not what the economics are now, but what are the economics? What do you think they're going to be in a year, 2 years? I think is important, and that's a guessing game, right? And I think it's something where some people are very good at sort of estimating what it's going to be like. I have an optimistic worldview of economic conditions. I don't think that this thing we're in now is going to be one of these deep, deep, long recessions. I think we're going to kind of bounce back, but maybe I'm wrong, And if I am, then that means that we need to be, tightening the belt now versus waiting for, the next thing to happen.
Mm. Cool. So I want to have a quick bit of fun with you. So if I gave you the keys to the secrets of scale time machine, and you could go back to yourself on day one, and give yourself, well, when you were day one of like, CEO,
Mm-hmm.
what advice about scaling would you give yourself if you could go back to yourself on day one?
I think so. Well, a lot of what we're doing is based on regulatory pressure, right? So, the open banking thing is a big deal for us, and regulatory pressure is what drives it. So when Brazil opened that up, and at the end of whatever it was, I think it was the summer of 2020, 2021, maybe, all of a sudden there's this land grab, and we signed up a bunch of customers right away. And we thought that that was going to continue country by country. And we learned that business tells the government what to do, and that you cannot rely on the timelines that you think that regulatory pressure is going to occur. So investing ahead of that regulatory pressure is somewhat necessary because you don't want to be late to market, but you got to be careful as a startup that you don't free spin too much and then end up having to keep the machine going while you wait for the market. And I think that if I could go back in time and give myself advice, it would be wait, don't spend all this money on marketing this solution and scaling up the solution in that particular area until you see the whites of their eyes on the regulations. And I think we could have saved a lot of money and invested it in other areas that would have made us more streamlined today.
Very, very interesting. Very interesting. And on that bombshell, Brook, it's been a privilege having you on the show.
Thanks very much.
Thanks,
Pleasure being here.
everybody. See you again soon. Ciao.